One thing I'll do is if I've gone through now and I decide I like the stock chart for Win, and I didn't see anything in the news or the headlines that made me uncomfortable, I might get into more detail by doing the stock research or the individual option research. This will show you all the data we have for the stock or the put. But what I'll do next is go into the search by symbol tool. Now remember at the beginning we talked about if I had a stock symbol in mind and I wanted to look at bull put credit spreads on Apple or Amazon, I would have clicked on the search by symbol tool first. Well, now I've identified this win position, that particular win position that was looking at the 95, selling the 95 put and buying the 92 for January, which is listed right here. Again, there's about our 24% return, net credit, and our probability here. What I want to do now is that now that I have a gauge on the stock chart and where I think the stock might be trading in the next 30 to 50 days at January expiration, I can kind of decide, do I want to be more conservative now or do I want to be more aggressive? Yes, this original spread that we found matched our criteria and had the highest return, but if I wanted to be more aggressive after I looked at the stock chart, I could maybe now say, well, what about the 97-95 spread? This is about a 2-point spread now. Net credit is 43 cents. Okay, so it's a little bit below my, it's a little bit below my 50-cent requirement, but it's a 27.4% return, and I've got a 71.9% probability. So it's not the 75% I was screening for, but after I looked at the chart and I said, okay, well, I think this stock's going to really move up, or I'm really confident this stock's going to probably stay higher above 97 or maybe even 100. So I can go to the search by symbol tool and now compare what would the probabilities be if I did do the 100 and the 95 or the 97-95. Or if I like the stock but I want it to be a little bit more conservative, we can compare it to the other positions. What about just a straight 5-point spread using the 95 put and the 90 put? Well, my return's a little bit lower. I have the same probability because I'm using the same short option, but my net credit's a little bit higher now because the cost for my 90 put would be a little bit lower. Of course, my maximum risk is going to increase as well. Or if I wanted to be more conservative, get closer to those higher probabilities, see here I can take a look at the selling the 90 put for $1.61, buying the 85 put for $1.04. This gives me the 57-cent minimum net credit. I have a 12.9% return and an 86.3% probability now. So you can just run your different comparisons after you've looked at the stock chart if you want to be more conservative, more aggressive, or stick with that original position that came up on the criteria. All right, so let's close down the one strike tool. Pretty much the last step I'll do when I'm analyzing a position, whether it's a credit spread, debit spread, or one of the other strategies, I'll go through the same process. Stock chart, company information, I can look at the detailed research tools, I'll go into the search by symbol tool, and now what I want to do is take a look at the profit and loss chart. Now the reason why I link to the profit and loss chart is number one, it gives us a graphical view of the position. So we have Win now up at 105.45. We're selling the 95 put in this example. We are buying the 92 put, so I see the hockey stick chart. And in addition to the hockey stick chart, what I see here with this curved red line is it's showing me the profit and loss of this position at the halfway point. 12.28 is halfway between today, December 1st, and January expiration. So it's just giving me the monetary values that the stock was trading at the individual stock prices. What would I expect to see at the halfway point? But underneath of the profit and loss chart, I can run basic what-if scenarios. What would happen if the stock drops, let's say, 8 points, drops down to about $97 in the next 2 weeks? Well, I'll just put in my expected stock price of $97. And let's see, we'll go ahead and select 12.15 here and click on Calculate. Oh, it's going to redraw the chart for us. And this new curved red line now represents what our bull put credit spread would look like on 12.15. And then over on the left is the theoretical gain or loss we'd have on the position based on the calculated theoretical value for the short put and for the long put. Of course, we could run that what-if scenario. What happens if the stock moves up 8 points and went up to $113 now in about 2 weeks to 12.15? And redraw the chart for it. The chart will stay the same, of course, at that point. But then down below, it'll show us the theoretical gain on the short put and the theoretical loss on the long put. So what would our total gain be on the position? So it just allows you to run some what-if scenarios. Now also when we linked over from the search menu, the tool didn't know if we were trying to simulate with 5 contracts, 10 contracts, or 20 contracts, so it just assumed one natural contract of the short and the long put. If I was doing a covered call, it would assume 100 shares and one call contract, for example. But if I wanted to look at the monetary calculations, if I did 10 contracts or 15 contracts, we can just scroll up to the top, and we'll just go ahead and change our quantity for the various legs. Click Submit. The profit and loss chart is going to look pretty much the same as far as ratios of gain to loss goes. The only thing different now is the monetary value of gain and the monetary value for potential loss. So just run your what-if scenarios, your catastrophe reports, using the profit and loss chart before deciding to enter into your trade. Okay, so we went into the search, created our criteria, saved our search, used the See More or Less columns button up here at the top to add the columns that we might use for our research and analysis. Once we've identified the position, we use the More Information button to analyze the chart. Is this a position, does this chart make me feel comfortable for a stock I'm looking for on a bull put credit spread, for example? We looked at the profit and loss chart, of course, the company news. And then our last step, of course, now that we've done our analysis, is we go ahead and place the trade with our broker. If you're using Options Express or Brokers Express, you can use the broker link here to do a bull put credit, buy the put or sell the put. Or if you're using a different broker, just log onto your broker, place the trade, and when you come back to PowerOptions, what we'll want to do is select Add to Portfolio. Now when I first click Add to Portfolio, what this will do is give me a selection. Do I want to put it in one of my existing portfolios? And we have several here on this account because this is the account we use for the webinars, of course. If this is the first time you're ever using the portfolio, you'll just be prompted to enter in a name for your new portfolio one, so you could call it Test Portfolio, for example. For this example, we'll go ahead and put it into the Credit Spreads portfolio. So I'll select that and click Insert. And now it's going to copy over the information for me into an entry field. So I'm going to buy the January 92 put and sell the January 95 put. I can select my number of contracts. Let's just go ahead and put in 10 contracts of the short put and the long put. Current transaction date. If I entered this trade yesterday, if I'm putting this trade in manually, of course, I would just change the transaction date to 11/30, for example. And put in your commission fees. If we're treating this as a paper trade, I'll just put in a commission fee of 0. And then, of course, the 2 premiums were copied over for us. If I place this with my broker and I was able to get the difference between the bid-ask spread, I would just change my values. If I was actually, let's say, able to get 265 for the short call, but I ended up getting filled at 205, we'll just change those prices. And once I have the data correct, we'll click on Submit. And this is going to link the position into our profit and loss portfolio. So now notice up at the top here, we're in My Portfolio, and we've switched over to the profit and loss portfolio. And we see we have a variety of different positions here. I haven't been keeping track of this one in the portfolio. You see I have some June positions that I haven't deleted yet and some September positions that I didn't adjust. But our position that we just entered is down here at the bottom. It's showing it here first by each individual leg. So I have our January 92 put, bought at 205. Current price right now is 197. So I've lost about 8 cents just due to the bid-ask spread, or where I got filled to the bid-ask spread. And then we originally sold the short put for 265, and it's showing us a current ask price of 267. So we'll have a gain of 2 cents there, which is actually a loss. So we have a loss right now after we've opened the position of about $100 total, just due to the bid-ask spread. I'm sorry, I should mention, of course, that we track the positions in the portfolio by trade. So you see that I'd have 1 short put, 6 bull put credit spreads. It's tracking it as linked trades, and then 1 bear call credit spread as well. Now, it's great to see them by each individual leg. But at the top of my portfolio, what I've selected here is the checkbox to view the position analysis. What that's done for us is it's added 6 extra columns over on the right-hand side. So let me scroll back down a little bit and move over. If you don't select that field, the view position analysis, you'll just have this value. Everything over to the left of the highlighted line now is just what you'll see in the portfolio. When I check that box to view position analysis, I can now view the position as a whole, as a linked position between the two legs. I'm sorry. So the position cost for a win position, it shows $600. Well, we originally collected about 60 cents of net credit, and we did 10 contracts. We collected $600. Our original expected gain was $600. If the stock stays above both put strike prices, both puts expire worthless, which would be an expected 25% return. Now the next column we're shown is the liquidation value. If I bought to close my sold put right now and sold to close my long put, it would cost us $700. So we'd have a loss of $100 or 16.7% of our original expected gain. The next thing we're shown is the future expiration value and the expiration gain or loss. This isn't projecting where the stock's going to be. It's saying if the stock stays at the same price it is right now through January expiration, which was at about 105, and remember we sold the 95 put. So if the stock stays at the same price at January expiration, we'll realize the full profit on our linked position. Okay? So checking that view position analysis field gives you a view where you can view the position as a whole. If I'm tracking a covered call, for example, it would show me the entire liquidation of both legs combined together. If I'm doing an iron condor, it would be all 4 legs combined together. All right. Now, some of the other features in the portfolio, if I wanted to, of course, I could select various alerts. So you see here in the alerts column, the September alert was triggered. That's because I didn't do anything as I got closer to September expiration. But I do have a December bull put credit spread here on FFIV. This was entered during a webinar, or paper traded entered during a webinar on 11/17. And what we're going to look at there is we sold the December 105 put and bought the December 100 put. And we received a net credit of $425. But I see that one of my alerts has been triggered, so let me go ahead and click on View. And this will pull me up to the alerts page, and I can set various alerts for the stock price limit if I have an upper lower limit, or change in the option prices, leg number 1 or leg number 2, the short option or the long option. And in this case, on the short option, leg number 2, I have a percent option change of about 80%. So if my option decreased by 80% or more, that's what the alert triggered. Okay, so let's go back to the portfolio there. And we originally sold this for $215 and bought the put for $130. So now we see that because the stock's at $138, the ask price of our short put's now 25 cents. We've made 88.4% of what we expected to make on the short put. Now if I look at the position as a whole, we collected $425 of net credit, and right now we could close the position for $100. It costs us $100 to close the position. So we've made $325 or 76.5% of what we expected to make on the position. So I can choose to do two things now. I could liquidate the position, or I could view I could view potential rollout opportunities right from the portfolio. Before I go into that, what I wanted to do very quickly is I did have a couple questions come in. I want to respect everyone's time because we are nearing 1 o'clock, and I'm going to spend a couple minutes just going through some of the analysis. Wayne asked Mike if we use a different broker. Can we use a paper account to track our real positions with our broker? Well, of course, Wayne. You can use any broker that you want to, and I highly recommend using the PowerOptions portfolio tools to track your positions. Most likely your broker will have a paper account as well. But yes, you should be able to track paper positions and real positions with your broker, and you can do it on PowerOptions. And pretty much one thing that I'm positive of is is that what I'm going to show next with the rollout opportunities in the position analysis view, I don't think your broker will have that. Susan asks, this is all in the archives? I think you meant archives, Susan. Yes, and remember when we were in that bull put credit spread, in addition to archive presentations we have on just using the PowerOptions tools that we're walking through today, there's also that 2-part series in the webinar section underneath the Learning Center for vertical spreads part 1 and part 2. And then Susan also followed up after that when I was going through quickly on the view. Not sure what you mean by it costs us $100 to close. What is the $100? Okay. when I opened this FFIV position, this paper trade, Susan, during one of the webinars, we did 5 contracts. Okay, we sold the short put for 215.